You've been asking for this one for some time now. This week we're going to give you a list of some of the credit card companies we use to help people build their credit. We're also going to explain how to go about building or rebuilding your credit. This is one you're going to want to bookmark. I'm David Bennett, and this is your real estate update from Financier's Mortgage Group, located here in way out wild and wacky Fort Worth, Texas.
No más cerveza, no más sangria wine, no más tequila with the salt and the lime, no más margaritas, no más señoritas.
If you'll give us the time, we help all of our customers improve their credit scores. For those of you with good credit, that means that many times you'll qualify for a lower interest rate. And for some of you, well, that's the only way you'll ever get a home of your own. Now, there are a great number of things that affect a person's credit score, so this time I thought I'd concentrate mostly on just one aspect of helping people get their scores up. It's very hard to talk about just one aspect of credit since things are so interrelated. The first thing you've got to understand is that credit scores are not credit ratings, but rather they're a sales tool for the credit bureaus. Where do you think those pre-approved credit offers come from? They sold your credit info and score to the creditors. Only one component of the score is your credit rating. Credit scores aren't about ratings, they're about usage. So if you have low credit scores and don't have any or don't have much open credit, you'll never get your credit scores up because you don't have any usage. You can't just wait it out and wait for the old stuff to fall off. That still won't give you a high enough credit score to be able to buy a home. No, you're going to have to dilute the old bad credit with some new good credit. Sometimes there's simply no substitute for adding to or rebuilding your credit. Now, we found there are certain commonalities to helping people with their credit. Almost everybody falls into one of these three time frames or categories. We found we make major inroads into improving people's credit scores in either 2 weeks, 2 months, or 6 to 8 months. Rebuilding your credit is a way that takes 6 to 8 months, and there are no shortcuts. The reason there are no shortcuts is due to the way credit scores are calculated. As with any game, you've got to know the rules of the game before you can have any reasonable hope of winning. So what are the rules to new credit? To get only the positive aspects of new credit, the credit bureau feels they need a certain amount of time to see how you'll handle this new debt. So here's the anatomy of a new loan. Now, initially, the inquiry is going to lower your credit score by 8 to 10 points. And this point deduction doesn't go away for 90 plus days. Now, according to the credit bureau, new credit impacts your ability to pay your other creditors, so your score isn't raised until they can determine if you have the capacity and the willingness to pay the additional debt. They say at least a certain amount of time must lapse before they can determine that. They generally hold that 2 reporting cycles as a proper time period. At the end of 2 reporting cycles, you'll have more positive impact than negative. The more cycles you have, the more positive impact. So 6 to 8 months is the minimum, but 12 months, 18 months would be even better. Now, no creditor reports every month. They report in 3 to 4 month cycles. So 2 times 3 months is 6 months, 2 times 4 months is 8 months. This is where the 6 to 8 months came from. But even if they did report monthly, it still wouldn't fit the credit scoring guidelines. They determined 6 to 8 months is the minimum. So this is the minimum amount of time needed for new credit to begin raising your scores. So you need to plan accordingly. Which brings us back to that old conundrum. If you've got bad credit or no credit, how in the world do you get new credit? And before we go any further, you need to understand that not all credit is created equal. The only credit that matters to you at this point is credit that is being reported to the credit bureau. So regardless of what they tell you to get you to buy the car, getting a tote-to-note loan won't help you at all. Renting furniture or TV usually won't help you either. Getting an account where they pull the payment out of some money that's already being held just for that purpose is not going to help you either. The credit bureau is looking for discretionary payments. They want to see, if given a choice, will you make the payments? So where do you go to get good credit that actually counts for you? Well, begin looking at your bank or your credit union. You're already a customer there, so they'll be more lenient to you than they would be to a stranger. Now, before we begin, let me say we aren't talking about going deeply in debt. Don't buy anything extra that would impact your ability to qualify for a home loan. but charge some things you normally would pay cash for, like gas or meals, and then pay them off or seriously down at the end of the month. For credit score purposes, a $5 payment helps you almost as much as a $50 payment, which helps you almost as much as a $500, which helps you almost as much as a $5,000 payment. It's the fact that you're making payments on a regular basis that impacts you the most. The credit bureau doesn't know if you're making minimum payments or paying it off. All they know is you had payment activity this month. You want consistent payment activity for months on end. So paying extra won't actually help your credit score, but it will help your credit rating with that particular creditor, which might buy you a raised credit limit, which does raise your credit score. To maximize your credit scores, you'd like to either not charge more than or pay your loan balances down to 50% of your credit limit. I've read that for the absolute maximum score, you need to get your balances down to 25% of the credit limit. And while that might technically be true, we haven't found it to be practically true. The difference in scores between a 50% balance and a 25% balance has been so slight, it's not worth spending the extra money to get your loan balance down below the 50% mark. But in any case, maxing out your loans makes your scores go down. So asking your existing creditors to raise your credit limit should be your very first step in raising your credit scores. Now, if that doesn't get you where you need to be, then you'll still need to go out and get some more credit accounts and prove you can manage your money well. So when you go to the bank, tell them you're trying to rebuild your credit and see if they've got any options. You might be surprised at some of the things they offer you. If you can't get your bank to extend you credit, then go to a local credit union. If you can't get a loan or a credit card based upon your good looks and credit history, then you might need to get a secured card. So what's a secured card? In a secured card, you put up some money for security, typically around $300. It's held in account just in case you don't make your payments. You still have to make your payments, and any card that doesn't have you making payments isn't credit. But as you prove yourself, first they'll raise your credit limit and then they'll remove the requirement for the security deposit altogether. But you need to be aware that all secured cards aren't alike. There are lots of creditors out there that are preying upon people with bad credit. If you can't find a local lender to give you credit, then shop the internet, but be very careful of the fees. And before you begin, let me tell you, there's one creditor out there you want to stay as far away from as possible. It's Capital One. We see more issues created by them than any other creditor. They're more likely to cause credit issues than to help you. But they spend the most spending in advertising, so their name will pop up at the top of the list. By the way, prepaid cards are not credit either. Now here are a few cards we've seen people have good success with. And just a warning, you're not going to get the best interest rates and fees will be higher than the normal credit card, but that's the price you pay for the lower credit scores. I've given you a lot more details and some comparisons over on our video page. USAA offers a secured card. You put up $250. They open a 2-year CD for you. You earn about 1% interest on the deposit. They charge a 9.9% APR and have a $35 annual fee. The Navy Federal Credit Union offers a secured card. Any active or former military member or relative of one, which is also the same rules for USAA, if you have bad credit, then you need to look at their card. It boasts an APR of only 8.99%. That's a rate you don't normally get unless you have excellent credit. There's no annual fee and a reward program that lets you earn points for every dollar you spend. Those points can be redeemed for merchandise or for gift cards. After 12 months of good behavior, they'll consider switching you to an unsecured card. Digital Credit Union has one with a bit of a twist here. You make a small donation to a non-profit. They have no annual fee. It also carries a fairly reasonable 11.5% APR. Citi offers a secured MasterCard. It comes with a low annual fee of $29, and they'll consider switching you to an unsecured card after 18 months. Citi invests your deposit into a savings CD where it earns interest of about 1%. Orchard Bank's another good one. You send in one application and you're applying for 4 different cards. 3 of them are secured, 1 is unsecured. First Premier is kind of the lender of last resort, I guess is the way to say it. They're expensive, or more expensive than the others. They charge more than $200 in fees per year, and they come with a 36% APR. But if you can't get another card, they'll give you a card. And after you've had this one for 6 to 8 months, you may be able to get one of these cards and then cancel this one. regardless of how complicated your situation is, we can probably help you. We've been able to get people home loans who thought they'd have to wait for years. We're not just for people with credit issues. For those who have great credit, we're usually able to get you a better interest rate than when we began, just by virtue of raising your credit scores even higher. If you've never paid your bills on time your whole life, you'll probably never be able to own a home. But if you've had issues or events that don't reflect the real you, then give us a call and we'll help you tell your story. If you'll give us the time, we can help you get a home at regular interest rates and regular down payments. Now, if the only tool in your toolbox is a hammer, well then every problem looks like a nail. We have a whole toolbox full of tools. It goes way beyond what the normal lender does. Not only do we help all our customers improve their positioning, but we also have multiple sources. And as a multi-source lender, that means we don't have to try to hammer people into the only loan type we have.
Grew up on a little two-lane highway. I'd fall asleep to a diesel lullaby. At the Phillips 66, I'd dare the tales the truckers told. Dreamed of the